right, what is going on, guys, gals, aliens, and degen freaks? Welcome back to the channel. So we are going to go through the news. We're going to go through the charts. We're going to talk about how we think people are going to be so surprised by the movements of Ethereum. You know, it's been months and months and months that the ETH BTC chart has just been terrible. The pivot, you know, out of ETH over the past year into Solana, into all these other chains to try and catch a run, catch the memes, catch the momentum, to then basically get ultimately rugged by presidents, by these insider groups. All the things have been brought to the table and have been revealed, and I think we're going to see the biggest resurgence back into Ethereum, and we're seeing it right now. Maybe not as crazy, maybe not as big as we want, but we are seeing the movement on ETH. ETH is picking up. It's starting to pick up some damn steam. We've been wanting ETH to freaking move. So today, guys, we're going to put the focus on ETH because maybe, just maybe, you know, Ethereum hasn't liked the fact that we've been dogging it, talking crap about it all the time. And so it said, you know what? I'm going to chop you around a little bit. I'm going to chop you around until you get beat down. I'll let you play the games of Solana and all of the jeetness that's happening across all those networks. But I'll show you who the true daddy is, who the true liquidity holder is, who the true solid chain is. It's Ethereum. But what's going on, guys? I hope you're doing good. I hope you're doing well. Ethereum is pushing this interesting pattern here. Now, guys, inverse head and shoulders is a thing. I know sometimes you don't want to think that patterns on the charts actually do exist, but they do play out, 80% of the time. Sometimes these bullish patterns, if you see them and you're thinking on the 4-hour and inverse head and shoulders on Ethereum could be the play. Well, if it is the play, well, that's the damn play. That's the trade. The ETH trade, you can see here on the 4-hour, actually, on the market cipher B here, we printed a green dot. We got money flow coming in. We got some momentum waves. We had a nice swoop. And then now we could be pushing up to that red dot here. You see the red dot here on January 31st? Well, we were at $3,400, okay? And that pushed it from this green dot here to here. So could we get from this area of support to push it up to this particular area, which is where we were not that long ago, which would actually put us up to the top of the neckline of the inverse head and shoulders for Ethereum. So this is what we're thinking for Ethereum for our altcoin analysis. But let's look at what's happening with Bitcoin. We have a pretty similar kind of pattern forming here on the 4-hour as well. If you're looking at this in terms of one of those patterns, then we could potentially start to break up to the neckline of this particular one, which would be right here, bringing us to another bullish move over 100K. The resistance level would be at that 102. We got some resistance here, but also we do have a little bit of support at 102,000 because that's from where we went from 102,000. Also with resistance, we had some support here. Not very much because we had more resistance at these levels because look, we got brought down here at 102, brought down here at 102, 102, and then below this 98 level. So then we have to look at moving back up to the neckline of these levels. Can we get the volume and the support? It looks like we might get it for the end of the week. Bring it up here, push it up here today and the rest of for tomorrow on the trading days for the open market. And then we start to go a little bit sideways to kind of chop out some of the longs. We're gonna have a lot of people possibly going long. Then we'll have shorts coming in. We'll get liquidation levels. The machine will keep turning and moving, and that is what is going to be happening with the Bitcoin price. I would just look out for these levels. Look out for this particular wick right here. You see $100,000 wick right here, $100,226 wick right here for Bitcoin, which ended up making it pretty volatile swing here from here of that support level. And you can see we're sitting on that exact same price of where we were previously on that scam wick. You can see a scam wick liquidity grab, and then this is what could take us into that price point. We got to break that level. Then we're going to go to the next one, which is 102,000. So we just let's see if we can get past 98. This is the level that we just got hit some major resistance. It's been bing bonging, for the past, pretty much since the beginning of February, just bing bonging, smacking around, sideways chop trading. And from basically the 3rd here. So it's the 20th now. Are we pushing it back up to the level? Well, it looks like we're getting pretty damn close. We're getting pretty damn close. All right, so here's the agenda, guys. Today in crypto, we have Michael Saylor hinting that he's going to be buying probably another $2 billion worth of Bitcoin on this coming Monday, that sweet Monday. And then we also have ETF filings for XRP and Litecoin coming down the pipe, going through all of the necessary requirements to actually get on the stock market traded ETF funds. And so this is, obviously bullish for XRP, it's bullish for Litecoin, but then you got to think about how it's the narrative for these American-based crypto companies for tax reasons and regulation in the United States. So this is going to be ultimately bullish for maybe your bags of American crypto, because this is ultimately going to save you on taxes. You might have to pay capital gains tax. And we have major announcements that Trump is actually trying to and successfully getting approval to audit Fort Knox. There is so much stuff happening with the narrative of the Trump golden age with crypto, better crypto regulation, clarity. Trump and his team with Howard Lutnick as the Treasury Secretary or the Commerce Secretary. I can't remember which one he was confirmed for, but there's so many good people on his team right now that want liquidity in America. They want this mass liquidity, this Bitcoin liquidity, energy. This is what they're thinking about. You're thinking about like money numbers, but what they're thinking truly on a meta, bigger thought process for America, energy. That's what it's all about. When you really start to think about it, it's about who can produce the most energy and can sustain their self and not subsidize the energy out to other countries. Because once you do that, you are owned by that country. If you have to get energy and resources from another country, they own you. And they could tariff you, they could put you in a hold, they could put you in a stronghold of manipulation, and then we suffer. The citizens suffer. We suffer for it. So the reason why Trump is so important, and you shouldn't be mad about what Elon and his team and Trump and what they're doing with Doge, the Department of Government Efficiency, is that we're trying to bring the power and the energy back into America. And if you're not down with that, then you are far from the level of being a patriot or even having any patriotic bone in your body, and you should move to another country. Because if you don't agree with it, then you don't want America to win, you don't want it to succeed, you don't want the energy to stay and be built in America. That's what this is all about. It's the long play. It's not the short, dim, let me siphon out as much money as I possibly can before I get caught and people learn what's going on. Let's use social engineering and manipulation to make people think that what we're doing is the right thing and that you should fight for us and become the parrot for your own demise. So that's literally what was happening for the past, 16 years. Craziness. All right, so then Binance has listed USD pairs again, so that is bullish. Binance listing USD pairs. And what that's going to do, if we can find the, where is the tweet? We had the tweet. Is this it? No, but this is Binance related. All right, so check this out. All right, so Binance.us is now going to have USD pairs again. Now, this is going to inject some more liquidity. It's going to give more access, obviously, for BNB for US-based customers if they're wanting to deposit their cash directly from their bank. And so it's going to put some more action on BNB, might raise up that BNB price, the actual BNB token. And then I would be curious to see whenever you pull up the BNB app, the Binance or the Binance.us app, what cryptos are going to be first seen in that list. Like what's going to be the trending list, what's going to be, because that's mostly how retail is going to buy. They're going to go in this market on what is first, like what do they see first and what are they going to speculate into. They might already have a little Bitcoin. Maybe they don't have any Bitcoin or Ethereum at all. If that's the case, they're definitely going to then go into the lower stuff because they're going to look at Bitcoin and go, damn, that's expensive. They're not going to realize that Bitcoin has historically been going up about 60 to 100% on year on average. So they're not going to think to DCA into that just yet. They're going to buy the cheap stuff. They're going to buy Dogecoin. They're going to buy Pepe. They're going to buy whatever they see on the list that looks cheaper than what the $100,000 markup of Bitcoin, whatever it is. This is at a point when retail is going to really start to say, okay, I got to get in this thing. I got to jump in. And it's going to be that same type of resurgence of what we had in retail in 2021 when we had the surgence into kind of the whole Wall Street bets movement, bank run on Wall Street, bank run, GameStop, Roaring Kitty, Elon with Doge, the Doge Reddit community. I mean, all of that was revolutionary. And honestly, and I love the fact that back in those days, we had a more rallying mentality. And now what we're seeing is basically that we went full PvP and battled against each other because of the nature of what we were put into. We were it's almost like we were brought up and born in a crime family, okay, with scams, and then we had to take part of it, and we ended up suffering and being the ones that had to bite the bullet and lose all our money and get burned. And so then it turned us into these conniving, like PvP and like succubus, like slime balls on X and on Twitter and on CT, flipping coins and telling, oh, get in this, because we're all down so bad. And we all could realize at this point that, hey, maybe, just maybe, if we didn't all hate each other so much and want so much and greed, that we could actually rally behind a few tokens out of everything and call it a day. And that's what the old market felt like, is that people rallied behind a token because it was the easy play. Now there's thousands of tokens. There's all these KOLs. There's all these, mentions of all these different tokens. Like, for instance, we have these right now that we were even speculating into, this broccoli token of CZ's dog. I mean, look at all the different damn distractions and coins. And even specifically with this one, there's like probably 1,000 broccolis at this point. So it makes it hard for someone coming in new to crypto to be like, what the hell do I buy? I've been hearing about all these different coins or all these different stuff. Like, what the heck do I even buy? It makes the new investor or the person that you're trying to onboard into crypto go, what the hell is this schizo shit? What is this goldfish-brained stuff that's happening right now? So this is kind of the state of the trenches. Are we going to get a resurgence back in our old plays, the old things that we used to rally behind, which were, guess what, guys? They were on Ethereum. That was the rallying point, was we used to rally on strong tokens on ETH. Is that going to happen again? Well, we're all hoping so. We're definitely all hoping so, for sure. We're hoping for that moment. Well, thank you guys for tuning in today. I really appreciate it. We started a little early because we have some things to do. We got a busy day. We got some accounts and contracts and things that we have to do today. And what's great is that it's all for a good, going for a good cause. It's helping pay bills. So that's always good if you could pay your bills. But then also it's helping to build up a really good DCA. You know, just you got to have how are you going to DCA if you don't have any dry powder? You got to have that dry powder. So whatever you're doing, make sure you have a strategy of getting extra cash, whatever it is, because if you're not getting extra cash, you're not going to be able to DCA, which is what we're going to get into here for just a reminder for you guys, the 3 steps for a successful bull run. And this doesn't include any specific coins. This is just a strategy that you can put on top of whatever you have done your research on and what you think is the super strong narratives of this cycle. You might even be on a narrative that no one else is right now, and you're like, this is it. This is it. That's great. That's a good spot to be, because at that point, you know, just because you don't see everyone talking about it right now doesn't mean you don't know about it. And that, like, hey, there's something boiling and bubbling in the surface, and you're first to market. That's a great advantage. It doesn't mean you're going to be 100% right. You could be totally wrong, but that gives you an edge. Everything's a risk. And if that gives you the edge in this risky game, that's amazing. So that's a great spot to be. So the 3 steps for a successful bull run includes a level of diversification. So we've always been told, like, don't put all your eggs in one basket. You know, don't go all in on one thing. It's irresponsible. And in some aspects, yes, it is. Some people would say, no, I just believe and I have conviction and I'm really just going to go all in. You could do that too. But if you really want to have a less risky portfolio, you could have some diversification, and you could have it split up between, the major coins like Bitcoin, Ethereum. You could into just stable coins. Some promising altcoins that maybe have been around for a while. You've seen they haven't been completely dead. They've done something. The chart's been able to kind of come back when we've had momentum. Some altcoins don't even during bull runs, and when we've had action, don't do anything. They don't do anything. They're just flatlined. That you could be holding some of those things, and that's when you have to go into your portfolio and say, okay, well, what am I doing here? Am I not holding the trend setters, what is the actual narrative and trend right now? And has it been similar to trends in the previous cycle? How can I hold those tokens? And a lot of them that have been the similar trends from last cycle have been the DeFi tokens. And now it's been the memes have really taken dominance. Gaming, I think, is going to be one of those narratives that comes back in heavy, but we've got a lot of the meme attention right now, and AI is has big attention right now. AI agents, all that vaporware crap that a lot of it's not even doing anything, but then there's some that are. Maybe you could find the one that's doing something that is legit. That might be a stronghold for AI stuff, but this is how you can build your altcoin list. And then you can go into the layer 1s, the layer 2s, all the different chains, the different protocols. There's new ones. There's ones that have been around for a while. So how are you going to diversify this split? Well, maybe you do a 60-30-10. You got 60% heavy Bitcoin, ETH, solid stuff. 30%, you're going into, I don't know, Aave. You're good. Maybe you have some Chainlink, and you can just, I don't know, you just go down the list of whatever altcoins you're not having in the basket of Bitcoin and ETH. And then you could take the other 10% and then have it into the high speculation stuff, the memes, pre-sale launches, whatever it is. Maybe, pump fund tokens, whatever yours are, the hardcore speculative 10%, like, hey, here you go. Or you even put a category to where you're just fully having a set amount of stable where you're just I'm going to gamble that. I know if I lose it, I lose it. So then you don't feel too bad. But then you have a portfolio that you're building up that you can hold long term, and it's not your GD portfolio where you're just letting stuff go all the time and swishing, washing, switching, flopping and groping. You know that, like, hey, if my alts are down 90%, that my portfolio is not going to be down 90% overall, because you have Bitcoin. Because Bitcoin will keep your portfolio sustained. You won't be completely washed. And I've noticed that with my portfolio now that I've built up more Bitcoin, and I'm like, all right, I'm going to have a solid base of Bitcoin. When we have those drops and those altcoins get smashed, I notice I'm like, oh, okay, my portfolio didn't get hit so bad. But people that are primarily holding all altcoins, that's why they freak out, because they're like, my portfolio is down 90%. Like, it looks like you're done. You're destroyed. So that's why people, like, even just for your mind's sake, just have a base of Bitcoin, and that might make your portfolio strengthen a little bit. And really the goal is to use these altcoins over time to get more Bitcoin. That's really what it is. And if you look at what the big whales do, that's all they use the altcoins for. They sell them when it's altcoin season at the peaks, and then they rotate back into Bitcoin. Everything bleeds to Bitcoin. Benjamin Cohen said that the other day, and I was like, it's true. It really is, because once you learn the fundamentals of Bitcoin and why these billionaires and trillionaires are trying to acquire it and hold it all and get it all for themselves, and then they're offering services for them now to offer yield and all this stuff, kind of like what Michael Saylor's doing. Like, they've learned that this is what is going to be the future, and if you're not doing this now, this is the prime time. It's max extraction value. Altcoins are basically a way to extract money out of thin air and put it into Bitcoin, which is then backed by a world network of miners. That's the strategy. So what's the step 2? Have multiple exchanges and wallets set up. You got to ensure you're locked out of platforms. You have to make sure that you can move in and out of exchanges. So that's very important. You need decentralized exchanges. You need a centralized exchange. You need a DEX. You need to have all of this stuff set up. Have multiple wallets, hot wallets, cold storage wallets. All this stuff you need to have set up. Everything. Learn how to use it. Send transactions between the things, between the wallets. Because at a point where shit's hitting the fan and you got to make some moves, you do not want to have only just one thing. Because what if that one thing goes down? You are going to be kicking that wall. Whatever's near you, you're going to smash it. You're going to be so mad. You're going to be so mad when parabolic moves are happening in altcoin season. Things are going up 30, 40, 50, 60% on the daily, and you're locked out of your thing. You're going to be like really mad. So you just need to have everything set up. Don't let people fool you and think you just need one thing. You need like 20 different things. 20 different damn things, because you never know what's going to happen. You never know. Look at what happened in 2022, 2023. We got rugged so hard. BlockFi, Celsius, Voyager, FTX. We got rugged so hard. We got massively rugged. Don't get rugged again. You think that can't happen again? You are mistaken. Have your stuff in your wallets. The moment you make profit, take it out. Use the exchanges to buy and sell, and then get the hell out of there. Quick. It's not worth it. I don't care how much yield they're giving you. It's false. So, and then you have to have the step 3, which is hodling and taking profits. You got to know how, you got to hodl. The only way you are going to really, truly make the gains that are legendary, it's not from trading and flipping coins. People will try and make you feel like that. It is false. It's not real. It's a lie. You will lose. Your real value is from the things that you hold, that you know and have researched and believe in, and that other people are also believing in and researching and buying and holding and are less selling it. the supply and demand mechanism kicks in, there's less sellers than there are buyers. There's more buyers on the token, which means things are rallying, which means you have an opportunity to then hold it more long term, instead of thinking that there's going to be 20,000 people that are going to dump on your head because they have a memory of a goldfish and they have a week-long trajectory of their investment. The SHIB holders, some of the OG Pepe holders, and some of the Doge holders held that thing, and then they cashed when it was like max profit. They probably held through just destruction, through the noise, through the distractions, through the new coin releases, through the new launches, and guess what? They were able to cash out millions of dollars. Big profits, not like 20,000, 50,000. Oh, I made 50,000, and what are you gonna do? Gamble it on another Switch? No, They were able to then go, I held one thing, I bought one couple times at a fair price, I held it for a year, I sold it, and there you go. And so these are by rallied tokens that we, from doing our research, all of us started to notice that, okay, this thing is something's happening here. One of them was being Doge, one of them SHIB. We had a couple different runners. Even just through the last cycle of last year, Floki went up 1,000%. That could have been one of the easiest ones. So it's crazy what can happen if you actually, doesn't mean you hold in round trip. It just means you got to hold it for longer than 2 weeks. TikTok brain. So find your core holdings. Keep substantial part in the top cryptocurrencies for the long-term hold. Ignore the short-term fluctuations, which everyone is having a hard time doing, and then have a actual profit-taking strategy and set price targets. Whenever your portfolio is up like a total of like a 3x, 4x, 5x, you could maybe start shaving off a little bit. Maybe you could start maybe shaving off just a little bit. Just a little bit. And at a point, there's going to be a time trajectory for you to take max profits. All right, so we'll get off this. I just wanted to remind you guys that really is a simple 3-step strategy to just go into this market cool-headed, get out of the casino, and remember that there is a strategy to this. It's not just going in and trying to flip meme coins and becoming a millionaire overnight. Because anyway, even if you did do that, that's great. Congratulations. What are you going to do? Are you going to buy Bitcoin with that? What are you going to do? Are you going to actually put that money that you just made and make it a long play? Or are you just going to keep gambling it? You're going to keep trying to flip it and then I'm going to turn my $10,000 and then I'm going to turn it into $100,000 overnight. You know what? Me thinking that, I've done this. I turned $1,000 into $10,000 by trading, and then me thinking that I'm going to blah, blah, blah. My strategy sucked, and I turned my $10,000 back to $3,000 instead of it going to $100,000. But if I have more of a long-term play, a more long-term strategy, I could have taken that $10,000 and said, success, I got it. $10,000. Boom, you did it, dude. You did it. You successfully did it. You extracted money out of the market. Now what do? Buy Bitcoin, you dummy. Buy the fundamental stuff. Hold it. Then wait. Be patient, because you being a greedy ass, then you just lost it. It will apply in your DCA plays, your trading plays, whatever your strategy is. You have to think long term. You're going to get wrecked because you're going to keep thinking you're a genius and that you're so smart. But no, you're an idiot. Take the money, take it out of the exchange immediately and put it into something so you don't gamble it away again. Because the market will convince you, and people on crypto Twitter will convince you got to keep making moves. No. You made it, put it in, call it a day, log off, and I could have bought 2 Ethereum and called it a day. But top is in, not buying BTC at 97K, we'll buy at 30K. But everyone that always says they're going to buy Bitcoin at a certain price, they get wrecked, because then they wait for that price. They wait for 30K, and instead of just DCAing over time, you get wrecked, because then you're waiting. Stories across the board on people waiting for 10K. Guess where the people are that waited for 10K whenever we were in a bear market. RIP. Rest in peace, because it never came. 10K never came. You know how many bears were calling for 10K when we were at 16? It never came. And then that was the bottom. We haven't seen it since. So don't call for certain prices like that, because you'll get wrecked. You got to just DCA. DCA, call it a day, and it really doesn't have to be that complicated. But we do know that with the momentum of Ethereum here, we're just going to pivot and talk about Ethereum again, because really I think Ethereum could start to, if we can just break this right here, if we can just get a mega pump here and break this resistance at 2,800, we're going to fly. We're basically going to fly. Well, if the number isn't arbitrary, it is a cycle thing. The cycle, what you have to understand is that the cycle is in 4 years. It's the 4-year halving cycle. And if you look historically on the halving year, it takes 530 days where Bitcoin sees its peak. And every halving year, the year after, every halving that we've had, the year after is where we've had Bitcoin break all-time highs, and we've had parabolic moves for Bitcoin. Now, has that happened every single time after a halving? Yes, it has. It's happened every single time since the first halving of 2012. That was the first halving. Bitcoin was created in 2009, first halving 2012, second halving was 2016, third halving was 2020, fourth halving was 2024, last year in April, and now we are coming into the area where we're going to be about getting close to a year. Once we get to April, we'll be a full year after the halving. So that's only 365 days. So then we still, from the halving, right here, have some time to go. We have till August and September. You think we're going to go to 30K? You think we're going to go to 30? You think we're going to go to 30K? It's never done that. Ever. From a bottom. After the halving, it's never done it. It's never done it. Look at the Bitstamp chart. Here's more data on the Bitstamp chart. It's never done it. Even during COVID. Even during COVID, the biggest worldwide black swan event that's ever happened, lockdowns, we still went up. You're not getting your 30K. I'm sorry, but I have to tell you this. You cannot have that type of mindset, because this is how people get wrecked. And I would hate to look at your portfolio to see that you have all altcoins and not enough Bitcoin. Because if you're waiting for 30K, you are going to be a skeleton. And then Bitcoin is going to go past 106, it's going to hit 121,000, and then literally Bitcoin is now $100,000 and more up of what you're calling for the 30K. That means if we get 30K, that means every big money institution that was betting on Bitcoin got liquidated and a comet hit the damn earth or something. That would be catastrophic. Now I get it, I know, because I mean the bears will be like, yes, bring it on, let's bring it on. But oh my gosh. The volatility right now is a little crazy. I will say on some of these coins, especially the altcoins, whenever ETH is like, we got to look at, because we've been watching Bitcoin, been talking about Bitcoin. We're not watching our trade. We got to keep an eye on our trade. We really want to do well on this one. So we're probably seeing some dippage on Ethereum. Yep. So we had some dips on ETH. When you get those dips on ETH, it really smacks it down. You know what we'll do? We're going to watch this because then we might be able to just scalp a little quick and then we'll re-enter right back in. Yeah. We're going to see what happens because we might get a nice little low and we might get a pretty other decent entry. And we'll limit order. Okay. It's a little shaky here. Oh my gosh. Yeah, that was a nice little dump. Hit right in that spot. So that was the sweet spot right there because it was bounced. That was kind of like support. That was pretty decent support from this level. Hopefully it doesn't want to clear and go right here because that would suck. But we might just right off the bat just be like, look, we're going to... Yeah, ETH is just being ridiculous. We need ETH to go, man. We need ETH to go. It's got to just start going. We need ETH to just run. I know you guys agree with me. We need ETH to just blast off at this point. It should be ready to go. I mean, at this point, it should be ready to go. This is just nasty. All right, guys. Well, we'll see you later. We're going to watch these trades. Thanks for tuning in. We do appreciate it. We'll see you on the next one. Thanks for popping in. Make sure you hit the like button, subscribe button, ding the bell to be notified when I go live. And make sure you check all the links in the description.